Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 12th. My name's Eric Wilkinson and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We didn't really get a whole lot other than in Great Britain, we got GDP, which is gross domestic product, came in at 0.5%, expected to be 0.2%, so that is good. We're seeing some of those numbers come out decent. Manufacturing production came in at 0.8%, expected to be 0.2% for Great Britain. Construction output came in at 2.8%, expected to be 0.9%, so a nice beat there. And then Great Britain's industrial production came in at 0.6%, expected to be 0.2%. Moving back here to the United States, let's get on with our economic data. We got NFIB, which is the National Federation of Independent Businesses. Small business index is what that is. It's a gauge of how confident the small business owner is feeling about the economy. It came in at 101.7, expected to be 102.2, so in line with expectations there. We got CPI, Consumer Price Index, came in at 0.2%, which is in line with expectations at 0.2%. And then we got the core CPI, which strips out some food and energy, because those can be a little bit more volatile. It came in at 0.1%, expected to be 0.2%, so slightly lower than expected there. They kind of want to see those numbers start to rise a little bit, believe it or not, because it shows inflation, shows demand. That to me isn't that big of a deal, especially if it was only missing by, that little bit. And then we also have the bond auction later on this afternoon. All right, let's talk about the overall equities. We've got the Dow Jones. We got a bit of a mixed bag here. Dow Jones is down on the day again because of Boeing, and that's dragging the Dow down while the broader equities are actually really rallying, but the Dow doesn't look too good because of that Boeing. All right, let's look at crude oil. Crude oil is starting to move a little bit higher today with some of this good economic data. It could give a little room to the upside for crude oil. People have been looking at the lack of demand lately. I still think that there is a bit of a lack of demand, so it can't really sustain a $60 handle. I'm expecting this to stick around the mid 50s. Then we got gold futures. They're moving higher. Most of this is a flight to safety as we're seeing the equities break, but we aren't able to get up into that 13 handle and sustain that. That's been a big psychological level between the bull and the bears over that 1300 handle. So we don't have any Fibonacci lines lined up against that, but you're going to need to make a mental note of that being a support and resistance area as it becomes a psychological support and resistance, nothing technical there. All right, bonds moving higher today slightly after some of the talk from Fed governors saying that they don't see interest rates rising and may even need a softer stance now as the economy is slowing. These guys are so far behind on the curve. I've been talking about this for 6 months. They should have stopped raising interest rates. And now they're starting to see that they have overdone it to the upside after missing all of the signals in the market, whether it was the housing market, the equities, or consumer sentiment. All of these things were signaling that they needed a pause, and they didn't. Now bonds are starting to push a little bit higher. I don't think that they're going to lower interest rates in 2019, so I think it may be priced appropriate, if not slightly lower than where we are. And then we've got the VIX coming off again into the 13s, still holding on to those teens, but barely, as the broader equities are rallying aside from the Dow. We'll take a look at that right now. Let's take a look at the Dow Jones Industrial Average. As you can see, it's in negative territory right now as the broader markets, with the NASDAQ near the highs of its day, piercing above the Fibonacci retracement and extension here, heading up towards the value area high, which is going to be a little bit overdone to the upside. You can see we were accepting price above this value area high, which isn't a bad thing, but it doesn't really fit my market assumption, although I've added a lot of long deltas in my portfolio in case of a bullish move here. So I'm not too worried about the upside. I just think it might be a little overdone. Taking a look at the E-mini S&Ps, positive on the day. Haven't gotten up above their Fibonacci extension there, but you can see it lines up with the value area high, which could act as a little bit more of a resistance than we would normally see just from a Fibonacci or anything like that. Overnight inventory, you can see got long. They flushed themselves out coming into the daytime session. A lot of rhetoric overnight about European economy slowing and things of that nature, really kind of pulling this market down. But on our economic data and coming into the day session, you can see we started rallying off of that data. A little bit of back and forth here, not unabated to the upside, but profit taking nonetheless going on here, which isn't a bad thing to see either. All right, let's talk about a couple of things that I'm looking at. JP Morgan, if you guys remember, I put on a long straddle in this. It just really is not going anywhere, and I'm pulling the ripcord on it probably today. It is lost about 50% in value. Doesn't look like it's going to go anywhere, and with the Fed really saying that interest rates are on hold, I don't expect the banks to really get any type of movement either direction anytime soon. So I'm probably going to be pulling the ripcord on this today. Remember, I have that in my margin account and in my IRA, so I'm going to be looking to take that one off. Something to note real quick, because I talked about it, let's talk about Boeing and how it's pulling down the markets. You can see yesterday on that data, they were rallying. It was looking like it could have been something as easy as a software update maybe, but today a lot of those 737 Maxes just have gotten sidelined and put on decommission list, if you will, or at least sidelined until they can find a patch for this anyway. So that's causing Boeing to come down. That's what I was talking about, it really dragging down the Dow Jones Industrial Average, which is why we're getting a bit of a mixed bag with the Dow Jones versus the rest of the equities. All right, AMGN, starting to see a little bit of weakness here, but you remember on the 7th, I got into this a little bit early, but you can see here on the 7th is the day I got into this trade. I'm looking to get out of it. We've gotten this little bounce, which is nice. We can see volatility is coming out of this market, which is exactly what we're looking for. We don't always have to have the directional move, right, if we have the rest of my rules falling into place. As you can see, this market is coming off a little bit, but with the volatility coming out, that's helping me as well. And with AMGN, I'm looking to get out of my 165 puts in the April. There are April 165 puts. I originally sold for $1.98. I'm trying to get out for just slightly less than $1. If we can get a little bit of push higher here and some volatility continuing to come out, I should be able to get out of it. JP Morgan is that other one that I'm looking to get out of today as well. I haven't put an order in as a working order, but I am looking, I'm probably going to be doing that here soon. So I do have a working order in AMGN though. All right, that's it. That's all I got for you guys today. Check out the webinar coming up on Thursday. It's going to be a really good one. It's part of this high volatility series. When we see this volatility come out, how we can take advantage of it, kind of like what we're doing here in AMGN, all right? So check out that video. Go to protraderstrategies.com. The more people there, the merrier. You know, we ask questions, go back and forth throughout this so that you guys are clear concept before going away from this webinar. You should be confident in this strategy. All right, so I'm going to show you how to set that up. If you can't take that, take it easy.